Michael Saylor put on a fur coat, got on a horse, and declared the Bitcoin winter officially over.
I mean, he bought $2.5 billion of Bitcoin last. There's not enough supply to eat up $1 billion a week from MicroStrategy.
Michael Saylor's already bought 815,000 Bitcoin, and at this pace, he'll be at 1 million by August. But while Saylor's pulling off the trade of the century, you gotta ask, is winter actually over? Because the Bank of England is quietly screaming the stock market is about to fall off a cliff. A quantum computer just allegedly cracked Bitcoin-style cryptography. Here we go with this again. And the U.S. Treasury just froze $344 million of stablecoins. And somehow, the dumbest people on earth are still telling you Bitcoin is risky. Welcome to Simply Bitcoin, I'm Rustin. Buckle up. Send it! All bears do not go to heaven. We got a big one today. 5 stories. 5! And every single one of them is the establishment screaming the quiet part out loud. Hey, by the end of this video, you're gonna understand 1, why Saylor isn't just bullish. He's executing a supply shock in real time.
Okay, so at that level of growth, like the 20-year time horizon, what price does that get us to for Bitcoin?
Oh, I think eventually it's going to 20 million, 21 million a coin.
21 million a coin. Okay, so what's that, like a market cap of like 400 trillion, something like this?
Yeah.
400 trillion.
I think it's going to emerge as the dominant digital capital of the world.
What would shake your confidence in that?
I haven't seen anything to shake my confidence yet. By definition, black swan, something unexpected, unanticipated.
2, what a 331-year-old Bank of England just admitted out loud about the stock market. 3, why the quantum panic headlines are the most dishonest thing on the internet this week. 4, why your stablecoins aren't yours. And they never were. And 5, why a U.S. soldier is going to prison for a $400,000 trade while Nancy Pelosi is up 17,000%. Let's go. Bitcoin, $77,839 as Saylor tweets this. Strategy, MicroStrategy, whatever you want to call it, just added 34,164 BTC to the Treasury. Total stack, 815,061 BTC. And I'm rounding here, but that's a lot of Bitcoin. Mike Novogratz, billionaire, not exactly a Bitcoin maxi, runs Galaxy. Well, he says Saylor is buying multiple billions per week and is about to trigger a supply shock. Yeah, no kidding, Mike. We've been saying that for like 5 years. Welcome to the party. Code check is on the left. Here's the part those bald talking heads on CNBC will not explain to you. Bitcoin adoption goes in waves. 2013, early adopters, the cypherpunks. 2017, retail wakes up, your cousin buys doggy coin. 2021, institutions show up, BlackRock files. 2026, nation states. This isn't a theory, this is a balance sheet. The US government already holds roughly 300,000 Bitcoin, China 190,000, the UK 61K. That's the same UK whose central bank is currently warning you to sell stocks. We'll get to that. El Salvador, Bukele, still buying Bitcoin every single day, marching towards 7,700 BTC. Wisconsin and New Jersey just added Bitcoin exposure to their public pension funds. Schwab's, 11 trillion is in. Morgan Stanley, 10 trillion is in. Goldman is next. Even Matty Greenspan, former eToro analyst, not exactly Saylor, even he admits increased institutional adoption will kick off this next leg. But what Saylor is missing is nation-state adoption. It's right around the corner. Saylor's not missing it, Matty. Saylor's the reason they're showing up. When the largest publicly traded company on the planet is buying Bitcoin like it's the last lifeboat off the Titanic, central banks notice. Imagine, and Greenspan said this himself, imagine central banks adding Bitcoin to their balance sheets the same way they added gold. Think of that run. A great flippening. That's trillions and trillions. And I don't have to imagine it. I'm watching it happen in slow motion. You're watching it. It's happening in slow motion. The Treasury Secretary is watching it happen in slow motion. Gradually, then suddenly. The only people not watching are the gold bugs, the fiat economists, and Peter Schiff. And Peter doesn't count.
I think there's mortgage-backed credit, there's corporate credit, there's sovereign credit. I'm on a mission to commercialize digital credit. You know, if we become 5% of the market, you know, it might take us 20 years.
Trillion.
And by that time, the 300 trillion is 600 trillion.
Yeah.
And the 5%, you know, is 30 trillion. And if we buy if we raise 30 trillion and buy 30 trillion of Bitcoin, Bitcoin's going to be worth $300 trillion. And Bitcoin's going to $15 million a coin. And don't sell your Bitcoin, Grant. And it's going to make your digital real estate business the best real estate business in the history of real estate.
I like this guy pointing at me.
Keep
like
the
that
Bitcoin.
shit's heavy, man.
Now, while Saylor's putting on his fur coat 3,500 miles away, the 331-year-old Bank of England, the original central bank, the grand-grandfather of the entire fiat experiment, it is an unholy place. Let's say that. It's having a panic attack. Sarah Breeden, deputy governor, head of financial stability, said this on the record. There's a lot of risk out there, and yet asset prices are at all-time highs. We expect there will be an adjustment at some point. An adjustment. That's banker talk for I would like to scream right now, but I have to keep my job. S&P 500 closed at a record 7,137 on April 17th. Hit fresh records again on the 22nd. NASDAQ the same. Everyone's wearing party hats, and the woman whose literal job is, quote, financial stability, she's on BBC saying, let me read the part that matters the most. The thing that really keeps me awake at night is the likelihood of a number of risks crystallizing at the same time. A major macroeconomic shock, confidence in private credit goes, AI and other risky valuations readjust. What happens in that environment? And are we prepared for it? That is the deputy governor of the Bank of England saying she can't sleep at night. She's telling you, in the most British way possible, mate, I'd take a little money off the table. Good time to take a little off the table, innit? Sorry to the British viewers, I get like this sometimes. You know how it is. Me mom died in the Weimar hyperinflation. But anyway, back to it. And here's the trap. The trap is correlation. The CME Group's February 2026 report, Bitcoin's correlation to the NASDAQ 100, ran as high as 0.6. So when the stock market squeezes, Bitcoin used to laugh. Now Bitcoin gets a fever. You remember October 10th, the flash crash. $19 billion, billion with a B, in forced liquidations in 24 hours. Bitcoin from a 126K all-time high in October to a 60K floor in 5 months. That wasn't Bitcoin failing. That was leverage failing. That was the correlation tax. So here's the question Saylor isn't answering, that Breeden won't answer, that CNBC and the bald people will never ask you. What happens to Bitcoin when the S&P finally listens to the Bank of England and rolls over? I'll tell you what happens. Round one, Bitcoin gets dragged down with the NASDAQ because the correlation says it has to, kind of. The leverage gets flushed. Maybe you see 65K, maybe lower. The doomers post their I told you so charts. Round two. Every central bank on Earth simultaneously realizes their bonds are radioactive, their currencies are melting, and the only neutral reserve asset left is sitting in a self-custodied wallet. And then we don't talk about 80K Bitcoin anymore. We talk about 800K Bitcoin. The Bank of England isn't warning you about a crash. They're warning you about a transition. And they're terrified because for the first time in 331 years, they don't get to be the lifeboat. Bitcoin does. Speaking of central banks not being a lifeboat, let's talk about what happens when you need liquidity but you don't want to sell your Bitcoin to get it. That's Ledn. 8 years, $10 billion in loans, 0 customer Bitcoin lost, the lowest rates in the industry, no fine print, auto top-up so you never get liquidity by some flash wick, 0 penalties. The larger the loan, the lower the rate. And the part that matters, your Bitcoin is custodied, never lent out. Gold standard protection, not the FTX trust me bro model. Though we hold it, you own it, you can verify it model. If you've held Bitcoin for a while, you already know. Selling is the worst possible move. Borrowing against it without rehypothecation is the only move that lets you stay long while you live your life. Scan the QR code or click the link in the description. Don't sell your Bitcoin, borrow against it like the bank does. Head to ledn.io today. All right, the headlines this week. Quantum computer just cracked Bitcoin-style cryptography. The crypto Twitter doomers are losing their minds. Gremlins on Reddit are on fire. Your dad just texted what you asking, is your Bitcoin safe? Let me explain what actually happened. Because what actually happened is the funniest thing I've read this month. A guy named Giancarlo Lilly at Project 11 won a $1 prize. For what? For successfully cracking a 15-bit elliptic curve key. 15 bits! Bitcoin uses 256-bit elliptic curve cryptography. Now I know what you're thinking. Rusted! 256 is bigger than 15, so they're like 17 times closer. No. The gap between 15 bits and 256 bits is not linear. It is, and this is the actual quoted word from the analysis, astronomical. To attack actual Bitcoin, researchers estimate you need somewhere between 10,000 and 500,000 high-quality logical qubits. Current public quantum systems are, and I quote, nowhere close to that level. They're not in the zip code. They're not in the state. They may not be on the same continent. Here's the actual takeaway. Bitcoin's open source. Bitcoin can fork. Bitcoin can upgrade to quantum-resistant signatures before the threat is even real. Every other cryptocurrency, every bank, every signature on every contract on Earth uses the same elliptic curve cryptography. If quantum breaks Bitcoin, it breaks your bank login, your email, the NSA, and the Pentagon. So you'll have bigger problems than Bitcoin. The strongest argument is not quantum risk is fake. The strongest argument, the one Bitcoin maxis have been making for a decade plus, is that Bitcoin can adapt. Fiat can't. Your dollar can't fork to a quantum-resistant version. The Federal Reserve can't push a software update to fix monetary debasement. The quantum FUD is the establishment's last desperate bedtime story. And tonight, kids, we're not afraid of the boogeyman.
Yeah, I think that's not a correct characterization. Yesterday, we announced Operation Economic Fury, and we, for over a year, we have had maximum pressure on the Iranians, both on blocking payments into the Iranian state and going after the accounts of the IRGC. One of the what may prove to be fatal mistakes that the Iranians made was bombing their GCC neighbors, and who are now willing to be much more transparent in terms of the funds or do a deeper dive in investigating the funds that are held within their banking systems. So we have pushed out to them the request that we want to freeze more funds of the leadership of the IRGC and any members of Iranian leadership. The other thing that we have done is we have told countries that if you are buying Iranian oil, that if Iranian money is sitting in your banks, we are now willing to apply secondary sanctions, which is a very stern measure, and the Iranians should know that this is going to be the financial equivalent of what we saw in the kinetic activities.
Is this an example of...
Now, this one. This one's the one nobody's covering correctly, and it might be the most important story of the entire week. Tether, the world's largest stablecoin, just froze $344 million in USDT at the direct request of U.S. law enforcement. Two wallets coordinated with OFAC. OFAC! We've been talking about this for years. That's the Office of Foreign Asset Control, the Treasury's sanction arm. Treasury Secretary Scott Bessent personally confirmed it. We will follow the money that Tehran is desperately attempting to move outside of the country and target all financial lifelines tied to the regime. Cool. So your stablecoin is now an instrument of U.S. foreign policy. Got it. Your stablecoins are not your stablecoins. They never were. Correct. Correct. A stablecoin is a digital IOU from a centralized issuer that exists at the pleasure of the U.S. Treasury. The day they decide they don't like you, your USDT, USDC, PY, USD, whatever the bullshit, your every other coin ending in USD, gone, click, done, see ya. Now, compare that to Bitcoin. The Treasury can freeze $344 million of Tether with a phone call. They cannot freeze one Satoshi of self-custodied Bitcoin without your seed phrase. Not one, ever. Bitcoin held in self-custody cannot be frozen, seized, or restricted. Hardware wallet, your keys, your coins. Our friends over at the Bitcoin Way will set you up with ironclad self-custody, proper hardware, Your own node, full on-chain verification, so your Bitcoin is actually yours. Not your bank's, not an exchange's, yours. Their team guides you step by step until you've mastered it. Oh, and they can help with privacy phones, Plan B residency, and so much more. No single point of failure standing between you and your generational wealth. Book your free 30-minute consultation today using that QR code or the link in the show notes and begin your journey towards Bitcoin sovereignty today, the Bitcoin way. Okay, now back to it. Tether freeze isn't the main event. The main event is what Besant announced the same week. Permanent US dollar swap lines to Gulf and Asian allies. Besant's framing, a testament to the US dollar's primacy and strength of America's economic shield. The hell is he blathering about? Sure, Scott, let's have Simon Dixon translate that for us. If you sell your bonds and shares, US markets break. We'd rather take your currency as collateral and print more dollars. It's our only choice as we burden Americans with more debt. To extract as much value from stocks and bonds for the transnational financial industrial complex while we still can. That's the FIC, the financial industrial complex. The reason gas costs what it costs, the reason groceries cost what they cost, the reason your kid's college tuition is $90K a year, the reason you work 50 hours a week and somehow have less purchasing power than your dad did working 30. And what Besant just did, extending the Fed swap lines to every U.S. ally, is the last dose of methadone for a junkie that has finally run out of veins. Dollar dependency, on demand, exported globally. The dollar becomes a transactional currency, not a store of value. Not that it ever was. You know what is a store of value? All right, anyway. The Treasury Secretary is openly saying in writing that the dollar's role is shifting. This is coming from one of the world's top economic hitmen. Besant is a human economic weapon, and he's saying this. The empire is signaling its own descent in real time, and the only people listening are the ones holding the lifeboat. Speaking of lifeboats, when the Treasury can freeze your stablecoins with a phone call and your bank account is one OFAC notice away from being inaccessible, your off-grid sovereignty stack stops being paranoid. It starts being basic hygiene. SAT-123, satellite phones, Starlink kits, Faraday bags and backpacks, the hardware you need to transact, communicate, and self-custody when the grid or the government decides you're inconvenient. Scan the QR or click the link in the description, and don't forget to use code SIMPLY for 15% off your order. Okay, big finish. Last story. And this one is so on the nose, you'd think I was making it up. A U.S. Special Forces soldier, combat veteran, placed a bet on Polymarket about whether Maduro would be captured. He won $400,000. The DOJ arrested him. Cuffs, charges, insider trading. Meanwhile, Nancy Pelosi has grown her portfolio 17,000% since 1987, from $800K to $133 million. Marjorie Taylor Greene up 476% since joining Congress. Bought up to $315K in stocks the day before Trump paused tariffs. Lucky guess! Ro Khanna, 3,000 trades, $50 million in 2025 alone. Beat the S&P by 112% since 2024. Dan Crenshaw outperformed Pelosi in 2021, bought stocks during the pandemic while voting on the CARES Act, and didn't report it as required by law. Kelly Loeffler dumped $20 million in stocks after a private COVID briefing in early 2020, right before the crash. The soldier got cuffed, they got reelected. And it gets worse. Max Blumenthal, investigative journalist, uncovered that someone short-sold the oil market and dumped S&P futures minutes before Trump's Iran ceasefire announcement. 3 times this month alone, made over $1 billion. No charges, no investigation, nothing. Presidents and their families can insider trade. Congress and their families can insider trade. You can't. Soldiers can't. The guy at the Chinese food place can't. You can't. This is the system. This is the FIC. This is the reason Bitcoin exists. Saylor isn't buying Bitcoin because the chart looks pretty. He's buying it because he can read a balance sheet. And the balance sheet says the United States, the Bank of England, Japan, the EU, all of them are out of road. They're exporting dollar dependency to keep the engine running just for another couple of laps. The Bank of England's deputy governor can't sleep. The Treasury Secretary is openly saying the dollar is shifting roles. The Treasury's freezing stablecoins. Congress is insider trading in broad daylight while a soldier goes to prison for a 400K bet. This is not a crash. This is a transfer. The peaceful Bitcoin revolution isn't a slogan. Every block that passes is another vote. Every SAT you self-custody is another ballot against the empire. You don't have to riot. You don't have to vote. You don't have to argue with your uncle at Thanksgiving or doggy coin-loving degenerate friends. You just have to opt out. Saylor put on a fur coat for a reason. He's not cold. He's signaling. The winter is over, and the people who spent the last 4 years calling him crazy are about to spend the next 4 years explaining why they didn't see it coming. Don't be them. Don't sell your Bitcoin. Hey, let us know what you think down below. I'm Rustin. This was Simply Bitcoin Originals. Smash that like, hit the subscribe, give us a pamp, and have an incredible weekend. And I'll catch you guys next time. Love you. Peace.
If you prefer to go down with the ship, you.